Thanks, Peter. I was saying to Peter when we were planning the session that it was going to be exciting, and what with YouTube clips and mood lighting, I think it has been. Well, today I'm here to present ABARES projections for our natural fibre industries. And we've just heard from Stuart about AWI's perspective of improving demand for Australian wool, and we'll hear shortly from Phil about marketing from the cotton perspective. But I'm here to set the scene a little bit for the outlook over the next few years. Australia's a big player in both of these industries as the world's largest exporter of wool, and next year forecast to return to being the third largest exporter of cotton. Generally speaking, the outlook is quite positive for both wool and cotton producers, with higher average prices compared to the last few years, improved demand and favourable seasonal conditions allowing increased production. Now, we've seen this slide before with Stuart, but I'm sure many of you are aware just how high the EMI has risen since the start of the year. This has occurred despite the Australian dollar reaching parity with the US dollar. Next year, we're forecasting the EMI to rise by a further 2% to around 1,050 cents a kilogram clean, following a substantial rise this season. Global supplies of apparel wool are expected to remain low, while demand for wool products is forecast to strengthen. Over the medium term, the EMI is expected to peak in real terms around 2013 before declining slightly. Now, this reflects the outlook for increased Australian wool production, combined with the forecast of cotton prices declining from current highs, leading to substitution away from wool, particularly mid-micron wool, which is most substitutable with cotton. Also, although buyers have recently been less sensitive to exchange rates because of low wool supplies that we have at the moment, we're expecting that over the medium term, the assumed high dollar will put downward pressure on wool prices. This year, Australian shorn wool production, as Stuart said, is estimated to be at a historic low of around 335 kilotonnes. Next year, we're forecasting for the clip to increase slightly, with wool cut per head expected to increase due to the excellent seasonal conditions we're having. The increased rainfall since early 2010 has significantly improved pasture growth in many wool-growing regions, despite some short-term disruptions caused by the flooding. The number of sheep shorn is forecast to increase as the number of adult sheep increases because of ewe retention for flock rebuilding. Now, one thing I'm sure many of you are concerned about is the effect of those floods on farm production, and perhaps some of you attended our session earlier about it. In some wool-growing regions, particularly north-central Victoria, there has been increased incidence of fly strike, and we could see some contamination of fleeces because of the floodwaters. However, the number of sheep losses due to floods over the summer months appears to have been fairly low on a national perspective. So for the outlook, the impact of the floods on the clip and on wool prices is expected to be relatively small. Looking a bit further ahead, shorn wool production is projected to rise gradually to around 365 kilotonnes by the end of the outlook period. That's about 9% higher than where we're currently at. The Australian sheep flock is projected to grow to around 73 million head by the end of the period. The effect on wool production and the increase in sheep numbers is, however, expected to be modest because of the changing composition of the flock. A stronger focus on meat production has resulted in an increased number of crossbred lambs and a lower number of wethers, both of which lower cut per head. Over the outlook period, we're expecting the proportion of ewes in the flock to rise to above 65%. This will set the scene for further flock expansion and a slow rebuild of wether numbers in future years. One point to note here is that producer surveys indicate that at this stage, many producers are maintaining merinos as a basis of their flocks, rather than going towards crossbred ewes. Now, this is good news for wool growers, and it's consistent with the positive outlook for wool prices and producer efforts also to lower risk within sheep enterprises by maintaining a ewe base that we can use for either wool or meat production. So that's the story for Australia, but it's important to realise that favourable conditions, particularly prices, are also being experienced in our competitor countries. We're expecting these countries to also increase production as Australia is going to, but in addition to the increase in the total wool production, we're expecting clips in competitor countries to become increasingly fine, which is what we've got here. This is particularly important in South Africa, where currently around 50% of the clip is in the fine wool range. These trends are likely to result in more wool that can compete directly with Australian wool. However, this is expected to occur at the margin because Australia's clip is more than 6 times larger than South Africa, which is the next biggest producer of apparel wool. So that's the production situation. Let's have a look now at the other side of the coin. Demand for Australian wool has increased this year, particularly for fine and superfine wools. Here we can see that the prices for these wools have really increased recently, and the micron price differentials also between the different wools in percentage terms is becoming greater, as that demand for finer wools comes through more strongly than demand for coarser wools. In particular, demand from some of the European countries has improved after being very subdued throughout that global financial crisis period. Our wool exports for the first half of 2010-11 to Italy and to the Czech Republic have increased significantly year on year. Also, imports of wool products from China by the EU have increased significantly so far this year. These trends are important for growers here because although exports of Australian wool directly to the EU are a really small percent of our exports, demand by those European processors has a big impact on fine and superfine wool prices at auction. Now, as that demand from the EU processors improves, share of Australian wool exports going to China, which as you know is our biggest market, is expected to decline slightly. China's share of the total Australian wool exports increased to 77% last year because of that subdued demand from Europe. This share is expected to fall back towards a longer-term average of sort of around 70% over the outlook period. China is expected to remain the key destination for Australian wool, and not only is it expected to continue in its dominance of wool processing, but as Stuart highlighted, it's also projected to become increasingly important as a final consumer of wool. Although we're expecting domestic Chinese wool production to grow, the majority of the wool they produce is in the coarse wool category. Over the medium term, we're expecting consumption of apparel wool in China to grow, particularly for luxury apparel, as those per-person incomes continue to rise, or that affluence effect that we heard about before. Given the size of the Chinese domestic market, this is a significant opportunity for Australian fine wool exports.